Going to the Fed meeting, let's talk about what we've lost. The groups that are no longer working, the ones that need to turn around if we're ever going to get a sustainable rally and out of this miserable period. These stocks are former leaders that have been taken out and shot. Sell. Just shot endlessly. Even as their fundamentals are often in tremendous shape. Not good shape. Not great shape. Fabulous shape. After captivating the market for ages, they've become millstones around the necks of investors everywhere. And that's how you end up with a situation where you had a day like today, kind of a somber day, not a day of real interest, not a special day. Dow up 67 points, S&P gaining 0.48%, NASDAQ inching up 0.22%. And it actually counts as a tremendous session, a huge win for the bulls. That's where we are now. The first group of dethroned leaders, let's just rip right through them. The meme stocks. The meme stocks. I say this because these people stick by me through thick and thin, and I love them. I regard myself as the leader of the meme team. Not. All right. These were exciting as long as they lasted. I mean, a little less than a year ago, AMC Entertainment was a $63 stock. Now it's a $15 stock. Still a victory versus where it traded at the beginning of the pandemic. But unless you got in early, this one's crushed you. That's what I was trying to help by telling people maybe at the 60 level wasn't so good. But I should have kept my mouth shut. The next meme name, GameStop. Powerful backer, Chairman Ryan Cohen. But the problem here is that the market perceives that the gaming cycle seems to be winding down. Availability has become much easier for all sorts of consoles, and most people would rather buy their games over the internet. I went to the website today to see what the top brands were. Well, the website didn't really work. I get that. Anyway, throughout the GameStop frenzy, the stock had a legitimate prop. The new hardware was flying off the shelves, and you couldn't find a PlayStation 5 for love or money. But now they're plentiful, and that means there's much less reason for anyone to show up at a GameStop. Memo to those who dislike me for saying this, I suggested you go take a classified ad out in a newspaper because Jimmy Chill is done with your moronic, scatological tweets and hopes you never come back from your permanent intellectual vacation. The other meme names never had longevity. AMC, GameStop. The Reddit crew loved that Corsair Gaming. that got cut in half. They tried to run and gun Wendy's, but it shed 6 right into their... It threw a Baconator right in their faces. In the end, it came down to AMC and GameStop. They were a 2-stock club with the collapse of Robinhood's stock, making for, I think, let's call it a fitting coda. Guys, enjoy talking to yourselves. No one else is ever going to listen. Then there's housing. Now, we thought we had something going when this was a leadership group. Oh, I love them, right? Because a lot of stuff goes into housing, punches above its weight. But the home builder stocks, not the companies, the stocks, have been crushed as mortgage rates have risen to 5.5%. Here's what you need to know. While these stocks might look cheap, as though they're trading right now 4 or 5 times earnings, that's most likely because the earnings estimates need to come down, perhaps gigantically. Housing affordability is the worst it's ever been. That's bad. They can't like that. In the first quarter, well, let's say you got double-digit price appreciation in 70% of the metro markets in America. 70. The median single-family home price has risen nearly 16% year-over-year, up to $368,000, according to the National Association of Realtors.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.